All right. So now, of course, let's go ahead and talk about the BlackRock situation going on here. So I have a few things to discuss surrounding it. A couple of things that we're going to stay away from. I'm going to acknowledge, first of all, okay, that BlackRock, obviously, just due to the sheer size, etc., can be a scary topic for a lot of people. We're specifically curious about cryptocurrency in general. That being said, a lot of people feel like there's the whole "you will own nothing and be happy" motto kind of surrounding BlackRock. Who will own everything? BlackRock, right? And part of that, of course, will be cryptocurrency. And what's interesting is the way they're doing it. And let's get into this. So BlackRock, the world's largest asset manager, is preparing to offer a cryptocurrency trading service to its investors' clients, according to three people with knowledge of the plans. The New York-based company, which manages over $10 trillion in assets for institutions, plans to enter the cryptocurrency space with, quote, client support trading, and then with their own credit facility. One of the people said, in other words, clients would be able to borrow from BlackRock by pledging crypto assets as collateral. One of the people said BlackRock will allow its clients, which include public pension schemes, endowments, and sovereign wealth funds, to trade cryptocurrency through Aladdin, which is short for Asset Liability Debt and Derivative Investment Network, the asset manager's integration investment management platform. The timetable for unveiling the service is unclear. BlackRock declined to comment. The asset manager may have been telegraphing its intentions as early as June when it began hiring for an Aladdin blockchain strategy lead. These days, it's taken as known that Wall Street banks and large financial institutions are edging into crypto, with the likes of Goldman Sachs, Morgan Stanley, and Citi carefully choosing strategies. BlackRock has already sent some positive signals to the market regarding crypto, including trading CME Bitcoin futures as per a filing with the U.S. Securities Exchange Commission. The company also has plans to launch iShares Blockchain and Tech ETF, an exchange-traded fund tracking an index composed of companies involved in crypto technologies in the U.S. and abroad. So one of the big things that they're doing as well, obviously, that we should be worried about is the loan thing. But here we go. So BlackRock also actually owns, according to this article, 16.3% of MicroStrategy, whose CEO, Michael Saylor, regularly trumpets news about his firm's Bitcoin holdings. And I actually didn't know that until I read this article. So one of the things that's a little surprising and a little concerning, obviously, here is that they own a little bit of everything. Like, you might say like 16% isn't that much, but that's quite a bit. That's also quite a bit of Bitcoin, just kind of through a shielded investment into MicroStrategy, who is one of the top Bitcoin investors currently around as far as like institutional investments go. So that's pretty wild. But a second person with knowledge of the plans said BlackRock was looking to get hands-on with outright crypto and was looking at providers in the space. A third person referred to a working group of approximately 20 or so inside BlackRock that is evaluating crypto, adding they see all the flow that everyone else is getting and want to start making some money from this. All right, so let's go ahead and just talk about this from the perspective of current holders of Bitcoin and what's going on here. Obviously, when we talk about institutional investing, everybody gets a little bit concerned. But I need to remind you of something, especially as it pertains to Bitcoin and the principles of Bitcoin. And one of the things that you need to pay attention to and consider is the fact that Bitcoin has a supply cap. So there is this theory from like the old heads, I guess, within cryptocurrency that Bitcoin itself is a Trojan horse. And while it is an asset that at the end of the day will completely flip on its head, in theory, the traditional markets, right, and allow the retail investors the everyday middle class, lower class investors to actually compete at a better level without the devaluing of their currency based on the printing of money by governments and banks. If essentially institutional investors get in, all they really do is increase the value of the cryptocurrency that those retail investors have. Therefore, the Trojan horse theory that basically because Bitcoin is so attractive as an asset that institutional investors will get in, they're basically getting in at their own demise. That is kind of the thought behind it. So when we talk about BlackRock being scary, etc., well, don't worry about it. As far as I understand from the white papers and from the theories and so on, it's kind of expected and also part of the transition into, I guess, the new world currency or whatever you want to call it. But that could be scary to a lot of people too, just depending on the terminology and me using the words new world right there. But I was referring to the, the Amazon game. Anyways, let's go ahead and talk about the portion that could be a little sketchy here. Make sure you guys have the better options to do, which is essentially the idea that they would loan you some sort of fiat currency in return for your cryptocurrency. That can already be done in a decentralized manner. So you don't need institutions like BlackRock or anybody else or banking systems traditionally to do this. There are plenty of different platforms where you can put up your cryptocurrency as collateral and get a portion of stablecoin that you can then go ahead and cash out for whatever you need to do. Do I recommend doing that? No, but I would recommend doing that over, of course, doing it through a third party. So that's what I wanted to clear up as far as that's concerned. So is BlackRock investing and looking into cryptocurrency, specifically Bitcoin, because it's different than a lot of other cryptocurrencies, just to be clear, a good thing or a bad thing? I think it's part of the plan. I think it's part of a good thing in the long run. The problem that we have, of course, would be total accumulation and the public never having access to this asset class, which could be a potential problem. But as long as you're a part of this right now, I think everything only looks to be positive, because as they dive into these investments, they're only increasing the value of your investment that you made before they were in. So I think it's a good thing overall. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.